Yeah, good morning, everyone. So we had seen yesterday a volatile day, uh, wherein Dow was up by almost around 1400 points and now ended at around 300 points down. So almost 16 to 1700 volatility was seen yesterday. So that has happened as Trump has indicated that the tariffs are coming and will be starting today. So, though the negotiations are going on, but he is not postponing the date of implementation of tariff. And also, he has indicated that the tariff on the China may be increased to 104%. So, which is indicating that the e- escalation is further happening in tariff war. So that has put risk off and uh, people reduce their positions. Similar trend is visible in the Asian market also. Asian markets are also open down, but we are seeing some recovery at the bottom of the market and in various markets, some recovery has happened. Commodities are also seeing negative trend, wherein uh, aluminum is down by around 101.5%, copper down by 2.5%. Oil has come off by sharply by $4, and iron ore is down by 4% in China today morning, and steel is down by around 2% in China. Uh, the indications on the other hand, that is positive side is that president president has said that uh, they are looking for negotiations with China, and had said that even the China is also looking for negotiations, but they are not coming on table, but they have to come. Uh, and apart from that, even their Treasury Secretary Besant has said that Japan and South Korea are front runner for making the deal. So, which is we feel is likely to give some positive signals in coming period. It's a matter of time how soon they come, but till that time, the volatility will continue. So India also likely to open on a lower hand, but what we see that the market is likely to see volatility, but more of any great bigger decline can become an opportunity to buy. Now I'll request technical team to take up from here.
Yes, thank you, sir. Good morning, all of you. This is Swati. Today, the market is likely to open with a gap down opening, and we're likely to witness a volatile trading session during a day ahead of a monetary policy as well. So on the technical front, Nifty has a immediate support at around 22,440. If it's break that level, then further selling can be seen into the market, which might take a Nifty on downside towards 22,370 to 22,300 levels on the lower side. Whereas on higher side, 22,670 is the first crucial resistance levels. If it manages to keep the breakout of the same level, then 22,800 levels can be tested on the higher sides. The overall view will be a cautious itself ahead of a monetary policy. If you look towards the VIX index, also it's showing very volatile trading sessions into the markets. Coming towards the bank nifty, 50,370 is the first support levels. Below that level, 50,000 can be tested, which is the psychological support levels. If it's break that level, then more selling pressure can be intensified into the bank nifty, which might take a indices towards to 49,700 levels on the downside, whereas the resistance is placed at around 50,900 and 51,200. So the overall view is the cautious on the Nifty and the Bank Nifty front. Whatever the pullbacks rally we have seen in the last two days, we might witness some sort of a cool off on the higher levels. So try to avoid major long positions. Whatever, if you have it, just please with the strict stop losses. That's it from my end. I request every two team to take a call forward.
Yeah, thank you. Good morning, everyone. So on the derivatives front, as you have witnessed that in yesterday's sessions, a major pullback has been witnessed on the overall market front and the index front. But in the night session, we have again witnessed due to global sentiments, there has been some fluctuations in the market. The major issue as per the data is India VIX. India VIX yesterday closed at 20.5 level, and in day before yesterday's session, we have seen that India VIX almost shooted up by 65%. It happens on a rare time whenever this kind of scenario takes place. We are seeing that the market fluctuation tend to be more dependent on the global factors. So till the time global is not getting settled off, till that point of time we will witness this kind of situation, this kind of fluctuation in the market. Once India VIX goes below 16 level, then we will witness some stability and lesser of volatility in the market. Till the time India VIX is not going below 16 level, till that point of time we should wait for any aggressive positions in the market. Currently on the downside, the support as per the OI position is at 21,700 level, and on the upside 22,800 will act as an important resistance zone. Till the time till the time this range is not getting broken out, till that point of time we will witness a 300 400 points momentum on the daily basis. Once the Nifty manages to give breakup to about 22,800 level, then we will witness a fresh buying opportunity in the market. But currently, as per the data points which we are seeing right now, the OI positions on the put writer front is not getting shifted. So this indicates that whenever there is a dip in the market, we can create new long positions because there is not much of aggressive call writer positions being created against the put writer positions. So whenever there is a major dip in the market, we can create new long positions. As per today's scenario, we can see, wait for the first half of trading session till the time it's getting settled out. For next 1 to 2 days of trading session, we expect market trend to be like this only. So currently on the downside, as per the near term support, as per the intraday support, 22,200 will act as an immediate support zone for the market. As per the stock specific and sector specific front, counter that looks positive will be from the Fin Nifty front. Fin Nifty index overall looks positive. We are seeing that the major sell off which we have witnessed from the overall sectoral front, but Fin Nifty is the lesser. We are seeing that the selling has been witnessed. Selective counter that looks positive will be Muthoot Finance, MFSL, and Shriram Finance looks positive. While on the negative front, Siemens, IGL, and Max Health looks negative. So that's it from better to front. Thank you.
Good morning. Senco Gold has announced business update for the quarter four. Quarter four revenue stood at rupees 1,300 crore with 14% growth. For the whole year, revenue stood at 6,200 crore with a growth of 18%. Overall retail segment grew by 19.4% for the year, and triple SG stood at 14.6%. During the quarter, stud ratio has grew by 39% on a YY basis. This was mainly led by launch of attractive marketing campaigns. In the press release, the company is guiding for the 18% growth for quarter one on account of Poila Baisakh and Akshay Tritiya event. So overall, this is positive for Senco Gold. On the update front, Concord Biotech has received approval from the US FDA for marketing teriflunomide tablets. These are used for treating patients with relapsing forms of multiple sclerosis. And in the US, the market size for these tablets is approximately $402 million, and the global market size is approximately $908 million. So this gives an opportunity for Concord Biotech. So this is positive for the company. Thank you.
Good morning, everyone. This is Kavita here. So TCS will be reporting its fourth quarter numbers tomorrow. That's on 10th of April. So dollar revenues for the company are expected to marginally decline by 0.3% on a quarter-on-quarter basis in a constant currency terms, primarily due to decline in the BSNL revenues. EBIT margins are expected to expand 20 bips to 24.7%. All the IT stocks have corrected significantly in the past few days and in the previous quarter as well, and valuations now seem reasonable. TCS is available at 20 times FY27 expected earnings. So investors with 2 to 3 years plus time horizon can accumulate the stock. For medium to year-long investors should wait for the results and particularly the management commentary to unfold. So any signs of client ramp downs can see earnings downgrades with more correction in the stock. So yes, one should be cautious and take calculated risks. Thank you.
Yeah, Transformer and Rectifier India has reported number yesterday, and the numbers were above expectations. Revenue grew by 32% year on year and 21% quarter on quarter, and EBITDA has seen smart improvement of almost around 400 basis point quarter on quarter and 500 basis point year on year. This was mainly driven by few of the order where the margins were comparatively better. But but apart from that, management has indicated that the order booking is quite strong in this quarter. The order booking was around 4,500 crore in the order book has come at 5,100 crores versus Q1Q 3,600 crore and year on year 2,500 crores. The order book is to be executed over a period of 15 to 18 months. Order book likely to increase to 8,000 crores by the end of FY26. And inquiry pipeline is also very strong at 22,000 crores versus 18,000 crore reported by the company in the previous quarter. Order inflow was strong at 2,100 crores versus quarter on quarter 600 and last year 400 crores. So overall, looks very strong numbers, and even the management has increased its guidance of on the margin front, wherein now the margins are expected anywhere between 16 to 17% versus earlier guidance of 15 to 16%. And also the order booking at the end of FY26 is also strong. Management has maintained its guidance of 2,500 crores revenue by FY26 and $1 billion in next 3 years. So quite a strong visibility and guidance by the company. Stock is trading at around somewhere 28 time FY27 earnings, so that leaves scope for stock to move up. So outlooks for the Transformer and Rectifier India is positive. One can accumulate this stock in this current fall. Even dependency on the US is very limited, wherein their export is at around 10 to 15%, and they are not looking to increase any focus on export as company is seeing larger opportunity within India. So that's all from us. Now request their commodity team is there. So that's all from us. Thank you very much and have a good day.